Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, August 30th, 2024. It's 4:08 p.m. right now as I'm doing the video, so the markets have just closed. And here's what I'm going to do. I'm going to start out here and focus primarily on the equity markets. It will not be a super long video. Just want to kind of recap where we ended the week. And I do think there's some pretty significant levels to watch that will determine or have a good chance of determining the next tradable trend where we might go next week when trading picks up. So I'm going to look at the indexes on a couple different time frames. I'm starting out here with those little short-term 15-minute charts I got out to you this morning. And so ES remains in the trading range. So if whether you're a bull or a bear, long or short lately, if you're frustrated, this is a stock market. That's going back to the middle of the month right here. This is mid-August right here. And we've been in this range, bouncing up and down, up and down, up and down. And here was today. So just to kind of zoom in today, I got out these little near-term trend lines to watch. We broke that one. We had I think it was about almost a 1% drop in NQ. I'm not sure. I didn't measure it out here in ES. I can do that for you. It was about 0.7% drop. And then as quick as they went under, they whipped it right back above. Remember, this is the midpoint of this trading range. This is the trading range right here. And we have now multiple reactions, including another one, because we parked at the close. So I always count that as a reaction if you kind of park at the end of the day somewhere, even though we haven't pulled back off there yet. So this is still the magic number to watch. And again, bulls want to see this taken out. If they pop that, undoubtedly there's a lot of stops above there. It's probably going to bring in some buyers. Unless it proves to be a whipsaw, then that's going to be a net bullish event. So the farther you get away from that level next week, the more bullish. Likewise, the MO has been go to the top of the range, come on down, back down to the bottom, or at least the midpoint. So this is to be continued on Monday. That's just want to point out that's what happened there. So again, we had just a brief whip down below there, recovered the midpoint line, which is support. And so those are your levels. Same ones I gave to you today. I don't think that I added any lines here. The NQ chart I slightly tweaked. Let me get to that one. So what I've done since the two I got out to you earlier today is I noticed this now. We have a better downtrend line. The one before, we had one right here. We popped it, but then we went back through it and down and through it again. So what that does, it invalidates that trend line in my opinion. So I always say the charts are dynamic. They're changing day by day, minute by minute. And therefore my trend lines, support resistance levels are always developing as we go. That's the downtrend line. Again, it comes off this high right here. And that's just the August 22nd high, by the way. We had this little wedge right here, beautiful little bearish rising wedge with a divergent high breakdown. And bigger picture is, or near-term picture, is we're still zigzagging lower. This was an equal high. They did not take out these previous highs, nor did they do that today. So, however, we went down and we put a reaction low there. And so we're starting to come up. So it's kind of indeterminate. All I can tell you definitively is there's a decent trend line that's probably going to come into play here if taken out. We parked there at the close as well. Right above that, you have the same support levels I gave you earlier. So there's your update. And there was that drop today. We broke down, went down, and then remember when earlier today when I gave you these levels, the 330, 381 hadn't been hit, and it didn't get hit today. What happened at that same time, ES, the S&P 500, successfully defended that midpoint range, and that's where the buyers came in. So it's been whippy, guys. The bottom line, again, long or short, bull or bear, as far as unless you're an active trader, you can actively try to get in and out of these little squiggles. But this is it. We're kind of just grinding around sideways in this range. And next week, again, these are the levels that I think will come into play. Now, let me give you some levels on the more significant daily chart. Before I do that, we were just on the 15-minute charts of the futures. I kind of just toggled to, and I should have included this, and I will now, the 60-minute charts. Then we'll get to the dailies. All right, so this is SPY, the S&P 500 ETF. You had this series of divergences here with little bearish rising wedge breakdown. Then you broke the more significant longer-term uptrend line. This trend line comes all the way back from, oh goodness, I got to go out to a longer time frame here. Wow, that's a really long trend line there. Let me jump back down here to the 60-minute chart. At the very least, it comes in here on these reaction highs, quite a few reaction lows, I'm sorry. And so that was bigger picture. Divergent high, wedge break, hit that one last hurrah off the trend line, broke the trend line, back tested, and we're below it now. And kind of this is what I'm focused on right now on the 60-minute chart of SPY. We recently put in a divergent high, as I mentioned in recent videos. Should we go on to make an equal, which we pretty much did today, or marginal new high, that will still be a divergent high. And so that, if we're going to get a catalyst for a failed breakout, again, I'm talking about this sideways trading range right here, that's going to be it. We're going to pop up, take out, make a marginal new high in the S&P, but it'll be a divergence on all time frames, on the 60-minute chart, on that 15-minute chart I gave you, on the daily chart. Really, this is a significant index, but I'm putting a lot of weighting on the NASDAQ 100 right now. And also keep an eye on those financials. I'm going to get to that in 1 second. So there's your wedge in blue right there. Bearish rising wedge. We put in a divergent high there, an equal high. It almost feels like with the momentum and the way I said, we have that clean separation. If we can get one more thrust up, we'll have that clean separation in the PPO down there in the RSI, and maybe put in a slightly higher high next week. And one way to trade it, if you're a bull and you want to take the breakout of this range, if you're bullish, take it. But then if it fails and we come back down in there, especially a breakdown below the wedge, that's going to be bearish. So your stop would be there. Likewise, if you're currently short the S&P and they pop it, like I said, you can give it a little room, but more you'd want to see by the end of the day if they've taken this out and these divergences, or sometime next week, I should say, then you don't have a strong case anymore to continue to be short. So you might want to have your stop set in a combination of a price level, but also time. You give it a little bit of time, because I could smell a little false breakdown there, a little whipsaw. But let's talk about QQQ. That to me is still the most important index here. And so this was the recent divergent high, wedge break, sell signal 1, sell signal 2, third trend line break, sell signal 3, back test. And we recently got rejected off that key about 485.68 level, 486. And so I'm going to zoom in here. And so you can see it's still lagging. And, the bullish case is that you're seeing sector rotation, money coming out of the overvalued big tech trades and going into other things such as financials. Again, I covered financials in depth yesterday. I'll do a quick update today on, I got a price alert on one, but I don't think we closed the day below it. It was AXP. I'll try to get to that in 1 second. So this is what I'd look at here. You can take that trend line and replicate what I just gave you on NQ right here. So that was a previous trend line. We cut through it. As you could see, it was in play before, but we broke, went down, went above. That's too many violations. So what I do at that point, I take that one away. And now this is our current potential trend line, because you've got at least 4 distinct reactions on it. And so that's what to look for next week. So in summary, and you also have price support there as well, just like you do on ES and SPY, like I showed you. So pretty much this is it. They pop it next week. Anything other than a brief move above and a failure, that's going to be near-term bullish and could easily set the stage for much higher highs. So like I said, anytime soon, and it depends on if and how we get up there. You extend the current divergence lines that you had, it's going to give you a bigger divergent high, and that's not a sell signal, but it's something worth noting. And you still have this big resistance level up here as well. So we'll see. We'll pick up next week and see where we're at. You still have, though I have to say, this is getting long in the tooth, and in my opinion, too long to be a valid bull flag pattern. I'm talking about that flagging action we had in QQQ on this daily chart here. And I say that because relative to the length of the flagpole, typically you'd want to see a bigger flagpole, something along these size for a flag that size. Doesn't mean it can't play out, just that typically that's based on the move up, the flagpole, it's a little more, a little large in proportion to the flagpole. Now, what I have noted here you can draw this downtrend. There's not a lot of reactions. There's 3 candles there and 1 here so far, a potential downtrend line off the highs. But what I'm noticing on the big market leaders, not so much Apple. Apple, just like a lot of things, recently put in potential candlestick topping patterns. This one had with the divergent high, which isn't anything to do with the candlesticks. That's just price making higher highs, indicators making equal or lower highs. Yeah, you put an island cluster top, these 2 candles separated by gaps on both sides. So, for that to be a reversal pattern, you can't take it out. In fact, ideally, you want to keep below those 2 candles right there. And so that's what Apple looks like. But the rest of them, you have these downtrend lines off the highs. Here's NVIDIA, 1, 2, 3, multiple reactions here. So this is what to watch for next week. Because if we pop much above those levels I just gave you on the S&P 500, NASDAQ 100, you have a pretty fairly well-defined trend line, downtrend line right there on NVIDIA. And of course, this one I'm giving a big weighting to. You have Microsoft I'm starting to notice these trend lines firm up with 3 distinct reactions. And so that one's also just below the trend line, also pinched below the 200-day moving averages. Again, the real, to the downside, you got to take out these recent lows to really open the door to more selling. And if you do that, Microsoft will move back down below the 200-day moving averages. So this is what I'm watching next week, these downtrend lines. NVIDIA, Microsoft, Alphabet's got a nice one as well. Again, these are daily charts, so these are daily candles, multiple reactions there. And so you can see the story is they're kind of pinched between a rock and a hard place, or in other words, between support and resistance. Support for Alphabet, for example, you have a beautiful uptrend line, which we just bounced off of, as well as the 200-day moving averages. That's the blue and red lines here. They buy the 200s on pullbacks. That's what you want to do, and that's what we did there. However, the bounce has been somewhat muted. So again, this is it right here. We closed the week just below resistance on a lot of stocks, especially the ones that matter, that move the market the most, and just above support. So this is what you're looking for next week. Most likely, again, if it's anything more than a false breakout, for Alphabet. And of course, the other things have to cooperate. I would never trade Alphabet in a vacuum. You want to look at what's QQQ doing. In other words, what does that mean? Well, it means if, let's say, Alphabet breaks down here below the 200s and below the trend line, but yet QQQ and Microsoft, NVIDIA, and Apple are all breaking out above resistance levels that are pretty significant, then that breakdown is going to fail. So you want to see collectively the majority, these either break above resistance, to go long and or cover shorts, or to break down below support. Amazon, same thing. So you can see there's a lot of these market leaders, the stocks that matter the most, that have the biggest impact on both the NASDAQ 100 as well as the S&P 500 at what's now shaping up to be some pretty distinct trend lines off the recent highs right there. And look, there it is. Look at Amazon, pinched between a rock and a hard place also. Primary uptrend line off the January 2023 lows, breakdown, and pretty much a back test right now. We're below the trend line right there with the 200-day moving averages right there. And we had the last test of the 200-day moving averages was right here. We also had positive divergence, just like we did back here when we went long Amazon and Apple as my 2 top picks in the beginning of 2023. And that's what we're looking at. We do not have that divergence now. In fact, we're coming off a very big divergent high. This is where the stock Amazon peaked back in 2021 right there. Double top and negative divergence. The divergence had been building for a while. And from that point, this is where it started to manifest in the form of a trend reversal, and good for a 57% drop in Amazon. And we come full circle. We're back to, turn off all the lines. You're right back to, well, roughly where the stock peaked back then. All right. So those are the levels to watch. These trend lines here, and I give you the levels on the 15 and 60-minute charts as well. Meta is just kind of doing the same kind of sideways grind thing, where it's got resistance as well overhead, pretty much equal highs it's putting in, a lot like how Amazon double topped back in 2021, except this would be a triple top if Meta fails to take that level out. And if it does, you also have a potential uptrend line. It might want to back test right here. I just want to loop back to NVIDIA, and other than the fact it remains below the highs, remember NVIDIA, bearish engulfing candle, followed by a bearish rising wedge breakdown as a sell signal, and hit that target right here. That was T1 on my weekly chart, my first target, price target. These are the targets I laid out back in late June before the market topped. I still maintain these targets. It's my current final target at this time. That's a potential target. If it says potential, that's not official yet. So that's and so this is basically, I'm viewing that as a reflexive bounce off T1, a likely and expected bounce. And you know, I can say this right now. We can go up here on NVIDIA in bigger picture, talking bigger picture, whether you're in or not. You know me, you know, so short all the way down, reversed it there, gained part of the bounce. But if you're talking just from this chart pattern, this whole sell signal here and these targets being laid out, we could easily go up, make a marginal new high. Remember, that is from that bearish engulfing candle. That's when I got, well, I added these targets after I got the short trade out to you. Then I added the longer term targets. I first gave you the short trade on the 60-minute chart. But what I want to show you is from to T4, it's about a 77% drop off the highs right there. And so if you're trading that way, if you're a long-term trend trader and you see that, and you see that any new high is going to be a divergent high anytime soon, or you just took the trade. Let's say you took it back here, and there was, again, this is a weekly chart. On the daily, that was the bearish engulfing candle, so that would have been the day you shorted. So let's say you shorted towards the bottom of that candle. And now T4 at that point is only going to be a 74% drop. You could give yourself easily a 15. You could even give yourself a 20%, easily a 20% stop loss, and that's an excellent RR. Again, you're risking 20% to make 75% roughly, and that's better, way better than a 3-to-1 RR. That's a good favorable risk-reward ratio. So that's kind of bigger picture stuff. Now, most of you probably won't want to do that. I wouldn't want to do that. I'm just telling you, if that's who you are and you don't like this in and out stuff that I do, it's just too fast. You don't like the 60-minute charts. You want to trade off the weekly charts, which we're looking at here, and try to catch the prize, you know, hit the home run or the grand slam, then that's how you trade it. However, near term, like I said, if we pop that trend line, we pop all those other trend lines collectively, or the majority of those trend lines I gave you on NVIDIA, Microsoft, Alphabet, Amazon, all those, then yeah, we're probably going to see some new highs next week. Otherwise, as I often say, resistance is resistance until and unless taken out. So that's resistance. That's our current downtrend line. 60-minute chart on NVIDIA. Again, that was the bearish engulfing candle and the sell signals on the 60-minute chart. T3 hit, reverse, go long, come full circle, divergent high right there with a bearish rising wedge pattern, just like you had one that back there, and breakdown. And this took us back down to, remember, this was my first in minimum target zone right here, which we hit quite a bit. We danced on it once it was taken out. We rallied back, we went down, we hit T2, yeah, that was T2 right here, second target zone. We bounced back, got rejected off of it. So there were a lot of reactions on that level, and that's where we're at right now. So that's why NVIDIA parked here this week. So this is kind of near-term stuff. Next week, if NVIDIA breaks down below here, we're probably going to go down to the next targets, and then, you know, each one keeps getting taken out. I think the selling will begin to accelerate, meaning we'll drop faster and faster. This is what an acceleration in selling looks like. You know, back here, everyone thought it was buy the dip, we're having fun. Oh, great, I've been waiting to buy NVIDIA forever. And here it started waterfalling down. That's where you start to get that panic type selling. So that's where if we get anywhere near T3 again, I think we'll just on down there. But hey, so I like to say support is support until less broken. So this is next week, pretty much where we close this week, or this week's lows is support. And then that downtrend line I gave you on the daily that comes off the highs looks something like that right there. It shows better on the daily. I'm going to take it off here. Okay, so that's something to watch for next week. Likewise, the semiconductor sector, SOXX, this tracks the PhilX SOXX semiconductor sector. It's the ETF for it. This is the same one. You can, if you want to use a leverage product or an inverse, you have SOXL, and XOXL is the long version, and I think 3 times long, and then XOSS is the 3 times short. Here, I'll cue them up for you. SOXL. 3-time bull, SOXX. Now, these guys, they get a lot of criticism, these leverage ETFs. I've talked about this many, many times, and I even explained the math in the FAQ page on right side of the chart, which you can find under resources, and then go to ETF related questions, that these 3-time leverage ETFs or the 2-time leverage will actually do better than the 200 or 300%. Compared to the underlying when you get a unidirectional trend. What's a unidirectional trend? When you're just mostly green candles on an uptrend or mostly red candles on a downtrend. That's when not only do you not suffer that decay that people write about. I've seen unlimited articles of how horrible these are. Yeah, I will say they're generally horrible buy and hold instruments, but if you're able to capture a trend. Now, right now, my confidence isn't really high on any type of waterfall selling. I told you when and where it will be, and that's if QQQ gets anywhere close to. These are the targets I gave you back here. T2 was hit here. We reversed. And so I maintain if we get back down and test the 200 soon, and especially we take out those recent lows, we'll probably waterfall down, may even cut right through T3 and go down to T4. And that's the better time. So what I'm getting at is when the market's kind of grinding around, like lately for the last few weeks, it's been grinding around, that's when you'll suffer decay by holding leverage ETFs. So there's really no benefit to doing so. If you can find, there's a lot of non-leveraged short ETFs or long, like PSQ is the non-leveraged short QQQ, just like SH is the non-leveraged short S&P 500. Or you go with if you're bullish, you go with SPY or just QQQ. All right. Ditto for the sector. There's a lot of sector ETFs that are non-leverage as well. Okay, guys, so you have the levels. Those are the levels I'm watching next week. Let me show you. There's a couple of things in SOXX that stand out. SOXX being the ETF for the SOXX semiconductor sector. And recently I've given you some targets, some longer term targets, which are pretty aggressive, but I think I still maintain. T6, it comes in line, it'll be hit with this primary uptrend line. Let me show you the actual index. Again, this ETF tracks the index. The SOXX PhilX Philly Semiconductor ETF sector has been around forever. It's the original semiconductor sector. You can go back into the 90s. And something I do this from time to time because there's always new folks coming into the site. And I know my targets both upside and when I'm bullish on something, things that can move, things like natural gas, things like crypto, Bitcoin, semiconductors. When they go, they're full throttle up, and the trends are usually triple-digit returns, meaning 100% or more. Likewise, the corrections, you can never have more than 100% correction. Just can't go down more than 100%, but you can go up more than 100. But the corrections are significant, and so back here, all these measured except this one. This one came after the dot-com bubble burst. It was 85%. This one was 55 off that divergent high. All these other 70% measured off divergent highs. And then you'll notice, so we had 55, 85, 70. And then you'll notice that all since then, since the market bottom, there was a bear market in 2008 to 2009 right there, and we bottomed out with about a 70% drop in the semis. And again, that's kind of run of the mill because it's a sector of boom and bust. When it's boom, these companies have more orders than they can even handle. And so their margins are thick and heavy and they're making a lot of money. And then likewise, all of a sudden, when it turns pretty quick. And then there's a glut of chips on the market, margins collapse, orders collapse, and so forth and so on. And that's why this happens. Now, what I want to point out is these drops here that I've measured again off these, this is a weekly chart. So these are weekly divergent highs, divergent high 1, divergent high 2, because it's a continuation of the same divergence, 27, 38. I'm going to read it out. 28, 27, 38, 48. And my next target is down here to this trend line. it's going to be from the highs from this divergent high. If and when hit, it should be about a 47% drop. So that is that's my T6, my final target right now. You're probably saying, Randy, you're smoking something. That's crazy. Semis aren't going to get chopped in half. Again, it would, to me, it's actually a longer term bullish outlook, because all I'm calling for is a pullback to the secular. This is the secular bull market uptrend line off the 2009 lows, or late '08, right? And these were just corrections. These 28, 27, 38, 48 were just simply corrections in an ongoing larger bull market that just brought us back to the primary uptrend line. So that's all I'm looking for now. But I'm open to, if we break that trend line, then you're going to see one of those bigger, 70+% drops. We're so far from that right now, it's not even worth talking about. But I did want to mention that that's where, that's what we're looking at. Now, first things first, we're not going to visit this. We will visit this trend line. All these long-term trend lines ultimately get visited, and ultimately they get broken. At some point, this trend will reverse, and there'll be a much larger secular bear market. And again, we'll talk about that if and when we start to approach this level. But right now, this is the level to watch right here. This is the key uptrend line. There's our divergence. It's actually bigger divergence when you really look from here to here. And so that's what we're looking at. So let me go back to the ETF real quick. Okay, so there's the ETF. Like I said, these are bull market corrections, and there's my targets right there. I wanted to just show you a couple of the semis here. Let me go down to the daily chart. And so to zoom down to more recently, we were just looking at weekly charts. There's the divergence. It's been building from this point. We had a divergent high. It's not as if it didn't play out. It certainly did. It played out for a drop of, 17%. It's a pretty healthy drop. The next divergent high was larger, and so far it played out, and it went right to the uptrend line right there. 27% drop. And the $1,000,000 question, is that it? Maybe not. I'm going to show you a few things that say it might not be. This is the PPO zero line. It does a great job on certain securities of defining the trend. When you're below it, the trend is bearish. And when you're above it, the trend is, as you can see here, bullish. Below it, all this point here, bearish. And right here, bearish, with a brief counter trend rally here. So you could almost trade off that. You could position off that. And what I see, the PPO is rolling down, poised to make a bearish crossover. Because one thing about this line is when you're above it, and again, look at the white lines, the lassitude across, it tends to act as support. You want to buy pullbacks to it, it acts as support. And when you're below it, it tends to act as resistance on bounces back. So this is the way I'm leaning, or I'd have targets up here if I was leaning the other way. And so what do we need to do to get there? Let me show you a few. Let me rifle through these semis real quick. The story is it's these big, it's just a handful. You have obviously the 800-pound gorilla in the sector, NVIDIA. And NVIDIA recently checked its uptrend line. It's still off its highs. Remember, NVIDIA peaked back in June. It's been months, and it's not too far off the high, relatively speaking, but it's still off that high. And I covered this already. Taiwan Semi, who makes the chips for NVIDIA, they're the manufacturer. They've got the divergent high right there. Beautiful wedge, breakdown. Hit the 200s, hit that 134.88 target that I had laid out in advance. That was posted back on April 8th. Hit it to the button, bounced as expected, but here's where we're at. So if you remember SMCI a few weeks ago, and then I updated it yesterday, I highlighted a key gap. It was at the bottom of the gap, and SMCI back tested it for a while, and then it got rejected. It's dropped sharply since. So this is a key gap right here. Traders look at the bottom, and so far the bottom of that gap around 176.50 has been acting as resistance. And if they pop that, they probably go to the top of the gap. That's usually what happens. The gap will be backfilled. And if they pop that, there's really no resistance until the next high. So, and if they do that too, you're going to get the PPO back clearly above the zero line, et cetera, et cetera. So one way to spin that, this is an objective short entry now. The charts, I can easily see them popping that, but all I can tell you definitively it's objective to short it up to, but not above 176.54. Yeah, you could make a case on a backfill, but I wouldn't want to see that. It's just going to do things. So this is it. So if we get rejected, I'm watching stocks like this one, TSM, and they're also NVIDIA, TSM are what, again, the semis are down. Don't get me wrong. They're down quite a bit in the last few months, but they're the last holdouts. It's just like the stock market. If you do what I do, I drill down, I go to the NASDAQ 100, I go to the S&P 500, I drill down, and when you start to get away from the top components that have the biggest weighting on the indexes, and they give it a false guise of strength, you get down to lower tiers, and the majority of those stocks are still in bear markets. They're still well off their highs from back in 2021 or 2022. Again, the vast majority. Unfortunately, the way it works is they have a much smaller weighting on the index, so they haven't dragged the index down. And so what I'm showing you here, and the reason I'm doing this, is to give you the overall health of the semiconductor sector. Because you have, just like in the stock market, just like in the NASDAQ 100, where you have those Mag 7 handful of stocks doing almost all the heavy lifting over the last couple of years, that's the same case in the semis as I go down. I'm just going to rifle through these. I'm going to point out any that stand out. This is Broadcom, AVGO. This is the most important level to me. A very, very well-defined uptrend line. We just checked that uptrend line at the recent lows. Remember, we had a trend line break there. This was a divergent high, broke the trend line, went down. Lots of clean reactions here, plus the 200-day moving averages came in there. That's the level that needs to go. And price resistance. There's a confluence of major support right here from about 143-ish down to the trend line, which will come in together, by the time, if and when we reverse. That's how it works. You're not going to go down tomorrow or Friday, on Monday. You're going to zigzag down at best and get there. So this is what you want to watch for. That trend line goes 143.57 support. It was the top of this trading range. These are the things I'm watching. So that one right now, like I said, I'll give it points because it's above the uptrend line, and it just had a successful test of the 200s, but keep an eye on it. ASML, divergent high, wedge break, secondary trend line break, bounced right off that 766 support. Again, these weren't lines that added, just recently moved it and touched it, and it changed the date I created. But I've had that line there for all the way since back here. It's a very significant level. It was this high, then you had a breakout right there. You can see the green candle exploded up on a gap after that. So this gap was very important support right here at the bottom of the gap, and they backfilled the gap. We're above it. So if we re-enter the gap again, that means you're going to lose the 200-day moving averages again. You probably come back down to the bottom of it. Kind of a messy chart. I probably shouldn't have, not super messy. Those are the levels I'm watching, but I want to show you some others. AMD, again, another one with a beautiful trend line. Another one way off the highs. Put in a divergent high with a bearish engulfing candle and an island cluster top. I mean, you talk about the trifecta of topping patterns. There's your bearish engulfing candle and engulfed the two previous candles. Those three candles together in the purple box were separated by gaps on both sides. That gives you what we call an island cluster topping pattern, which is a top of a trend, starts a new downtrend, which say what you want about it, but we've already dropped 45%. I think that's safe to qualify as a trend reversal, right? And now you have this uptrend line. We had a brief stint below it, but that's normal. Everything was kind of cratering a couple weeks ago into the lows on the 5th. And, so on a weekly candlestick, you'd probably see it just holding the successful defense of that trend line. Either way, we're back to it now. So I'm watching that. That's an important level. Qualcomm, QCOM, divergent high and island top. Beautiful little, look at that little one doji candle separated by gaps on both sides. And again, that marked the top so far, which was about 35%, 34%. So this one, all I can tell you, we've got a little trading range here. It recovered. It briefly went below the 200-day moving average. The average is. They're both just below it. That's the red and the blue line right here that come in together. And so it's similar to those indexes, especially the S&P. If it can pop here, as long as that breakout sticks, that should be bullish. And if it goes down below, that's going to be bearish because you're going to have given up, dropped below this consolidation trading range, and also lost the 200s again. And you can see the PPOs down in bearish territory right now. Texas Instruments, waiting that one, perfect bounce right off the 200-day averages, recently exploded higher. Big divergent high. Had a divergent high at the previous high. Again, it's not as if that divergence didn't play out. It certainly did. Played out for a drop of 14%. They bought it exactly where they should have bought it, at the 200-day moving average. And like I said, all this is a marginal new and still divergent high, and there's your trend line. So guys, I would recommend replicating this level, because this, all these levels, the important ones, if the semis break down, so on Texas Instruments, you want to see a solid red candle, a solid close down below that trend line. And that's going to be a pretty powerful sell signal. And these divergences, just like the divergences we had back here, tell me that we're going down, and we'll probably go down more, because these divergences are much longer. They're twice the size, the magnitude of those divergences now. And so that would be the catalyst to, you know, take us down even beyond those lows. Look at this one, AMAT. The chip equipment makers are the canary in the coal mine for the chip sector. AMAT, KLAC, and the likes, because they're the ones that make the equipment that make the chips. So when there's an initial slowdown in the sector, that's the first thing you're going to see. The chip equipment makers like Taiwan Semi, who's making the chips for NVIDIA, they're going to start canceling or pulling back orders, and that's going to be reflected in the charts of the equipment makers. And you can see here, there's a beautiful uptrend line that AMAT was walking up. Broke down there, back tested, rejected, and if we zoom in here, it's currently hugging on the 200-day moving averages, but we already had a textbook breakdown and back test and rejection off the back test. I always say back testing, yeah, it's objective to short it, but the problem when you short a back test of an uptrend line is the dang thing can continue to back test for weeks or months at higher and higher prices, and then sometimes it can just blast on through there after a back test for a while. And then you're like, well, shoot, where did I put my stop? I'm just going down, down every day. So I like to see that rejection to validate, you know, back test. Either way, like I said, 200-day moving averages, those need to go. But again, this is one that, you know, clearly bearish chart pattern to me. It looks like it just topped. Now it's the first leg down off that big divergent high, major primary trend line broken, back test. So this one appears to be going a lot lower. Birds of a feather, guys. So, you know, most likely you'll need to see the whole sector go down, or majority of them. ADI, analog devices, you can see the divergent high. Perfect. I mean, charts just worked so good in these guys. Look at that 201 support level right there. That's a line I've had for a while there. And I mean, a blind man can see that support level. Look how many reactions. Boom, breakout, rally, perfect back test. Oh yeah, back test to the 200-day moving averages as well, and then bounced. The million-dollar question, is that just a correction off a divergent high, or the first leg down and a much bigger move to come? If it does, this is, which I believe it is my next target down here, about 180. KLAC, another big chip equipment maker, just like that SMCI, has that gap right there, and some others that it's been back testing and can't get through. In fact, look, oh no, I thought it might have punched up. No, it didn't punch up and make a backfill. It entered the gap right here one day and got smacked down, and it remains below it. So look, guys, simple stuff. Replicate these levels. Pops in there, it should backfill the gap. Breaks above the top of the gap, it's going to make a new high, but it will be guaranteed to be a divergent high anytime soon. I know some of you kind of poke fun at that, but that's, hey, I analyze the charts. You guys do what you want with it. I'm just telling you that divergences, that breakouts that occurred at new highs with negative divergence, just like this one, that's all that was right there. And I could show you a ton of these. It was a breakout above the previous high. That kept took the divergence we had there, made it a little larger, and then if you bought that breakout thinking that was bullish, well, you rode out a 28% drawdown from there, and that's just kind of been the MO of the market lately. These are, like I said, the day these divergences are gone, I won't have a strong case to make. But if we do, and look, this was a divergent high. We haven't made a new one yet. We may not. Again, I'm just pointing out, if we do, what it'll look like, what I'll be talking about at the time. But if we don't ever get there, then guess what? Just like SMCI, and you know, got rejected hard off the gap, test to the bottom of the gap. This is what you want to watch. And like everything else, you've got these little near-term trading ranges. And you get these trading ranges, and then the direction you break from the trading range usually determines the next big move. Once you gap down below there was another 15% drop. All right, and so here was a trading range here. Right there, you broke down. It was a double-digit drop, and then you got back in it, and finally you broke above the trading range right here, back tested it, and you got all that. LRCX, Lam Research, same story. See these semis, like I said, birds of a feather. Once you get away from even the big ones like NVIDIA did put in, Taiwan Semi, all put in divergent highs. Their charts are almost identical. They all put in these giant divergent highs. And I've showed you again repeatedly, going back for decades, the pattern of them, especially when they're on the weekly charts. These drops are, so far this appears to be by most metrics, just the initial leg down with a counter trend bounce, which I fully expected off the lows on August 5th. That's when they all reversed. And look, it wasn't random. You can look at, and that's why I do these long-winded videos. If you take the time to replicate these charts, if you really want to know, why did I cover on the 5th and go long? It wasn't just any one thing. It was a combination. You had a ton of key stocks. Look how good that support level is. And that wasn't just a random line added. That line was created, you can see on April 8th. I created that line back here, right here, as a target, from this wedge break. And what happens? We broke down. Yep, I thought we could go down. That was a target then. I had a target here. We hit the first target. We bounced. What did we do? We made a marginal new, but still divergent high. That divergence just got bigger. And the drop got bigger, right? Small divergent high, small drop, bigger divergent high, big drop. Maybe that's it right now until I see enough evidence. This one, for example, that was really a first support / target zone right there from about 862 to 905. Right here, you can see, it's a support zone when I have two support levels in close proximity. So all this is a breakdown. Since we already hit it once, as I often talk about, targets hit once, that opens the door for the next time around to probably take it out. You had a little consolidation around it again. You took it out. You didn't just take out that support zone. You also took out the 200-day moving averages. See them there, the blue and red line? We rallied back, clocked hard, right on, hit the 200 days, hit the right smack in the middle of the resistance zone, because support, once broken, becomes resistance, and rejection. So this is what I see now. Like I said, the indexes and some of the financials, other things are still holding up. We could get that near-term pop next week or not. We're at those levels. However, this sector to me, collectively, when I look at all of these, especially if you notice now that we're getting away from NVIDIA, Taiwan Semi, the two largest ones, and as you go down the line here, these charts are starting to look more and more bearish, aren't they? You can see this, I don't know if it's being talked about, but the semis are in a bear market. This is Micron. Micron dropped from that recent divergent high and bearish engulfing candle right there. Look at the massive bearish engulfing candle. I mean, these were just beautiful sell signals. That from that high, it fell 46, almost 47%. Did it randomly reverse? No, reversed on August 5th. Did it randomly reverse just because the market was at support and everything else, and NQ and all those other things hitting my chart? No. Micron also hit support. So see, this is why I love this stuff. It's not mere coincidence. You just got to know where to look, but I can't tell you how many times I've done this during big moves up, big rallies, and big drops where you have so many stocks, indexes, sectors, and key stocks all hitting support or resistance around the same time. And when you see that, and you see other signs, other reasons to go long, look, we were well below the 200 days there, but remember, the stock market, the indexes were hitting the 200 days and successfully held those. However, these guys are one step ahead. This is the first tech sector to have rolled over. This one, I believe, has more downside to go. That's why I'm doing the video. There's your primary uptrend line. We hit it. We bounced. That was the lows. It should have been, I believe, on August 5th. Yep, right there, August 5th. An exact hit of the trend line. I mean, there's no variation in this trend line. Look how clean and neat that is. There's not a single violation in this trend line. And we hit it to the button. You could have bought Micron and got a 28% bounce in a couple weeks. That's swing trading. Get in, get out, and look where we rallied to. That was a target. Again, it was a support level target created back in May 23rd. Rallied back to it. And then it was a brief, what I call momentum fueled overshoot. It's not uncommon to see a slight overshoot of the 200 days, and now we're back below them. So now this is a big level. We checked it here. That means if we go back down again and we cut it, that helped to validate that trend line. If people didn't see it back here when I saw it, how can you not look at this chart and see that trend line? So this is what I'm saying. Mark these levels. I believe I have price alerts set under most of them. And what I can tell you is the rest of the market's only going to go so far if the semis break down and trigger these next sell signals, because they're going to be powerful ones. Remember, all this is a correction. We got way overbought, way overextended, too far away from its trend line. You get those mean reversions. Maybe it's off to the races now because we checked it. However, if we do that, it's going to be ugly. Intel, you know, one of my favorites. It's the only long that I have in the semi arena. It's I consider it an offsetting. It's an indirect hedge, if you want to call it, to a short on the semis. Also a pure play. You can trade it however you want. As I mentioned, it's based on, we highlighted this one as long, based on this long-term support right here. Very well-defined and positive divergence. And now what Intel needs to do, you can see I put a line here today, 2196. It needs to clear that level. Boom, boom. Look at that. Boom. And this is in post-market right now. Let me turn off post-market trades. Well, I'll leave it there. It's still trading right now. We closed right at that level today. So that's what it needs to do. I think I told you in the video, I added it here. This is a minimum target, and right now the only target, there's big a double bottom low, which we also went long both times. We went long Intel there. We gained that bounce. We got out. I think we even turned around and shorted it. Yeah, we did back one of those. I think it was that one or both. Then we went long again there, and I gave you two other targets right there. We hit them, but we didn't have a chance because it gapped right past there this time around, and then it hit the next long-term support. So anyways, that's Intel. All right, guys, I can go through these. Let me just see if any stand out. NXPI, divergent high, wedge break, kickback rally, plenty of resistance right here. So this is where things start to change. This is why I do these long-winded videos. 263, you can see that. There was my support level there. Yeah, the trend line break, sell signal 1, support level break, sell signal 2. If you missed it, you got another chance on the back test of 263. Support once broken becomes resistance. Got rejected there, went down, hit the 200 days, bounced, but we're still below that. So if collectively these stocks start punching above those resistance levels, and it shows that they successfully, held those that are above the 200-day moving averages. Again, it's a collective thing and also a weighted thing. As I get down to the bottom, the last one, and these are all the holdings that what I'm doing is clicking through the holdings, as I always do, by market cap. The video, a $3.1 trillion company, Taiwan Semi, 876 billion or 877 billion. Broadcom, but you go down a line here. Wolf, the smallest in here, is only but it's a $1.3 billion company. In other words, it's not going to move the needle as much. But I'm doing this to show you the collective health of the sector. It's just like the stock market. I remember clear as a day, 2007 top. You saw the same breadth deterioration, the same back then. They called it FANG or whatever. Fewer and fewer stocks, the overweighted big tech stocks. We're doing the final lifting of the market before it peaked in November of 2007. So what you have is something similar here with this, poor breath, more and more semis sinking down, and fewer and fewer that were up to the top doing the heavy lifting. Again, they've all rolled over. This one, breakout today. I had a downtrend line right here. You can see that one created that back on the 20th, 10 days ago, and it broke out today. So, yeah, definitely wouldn't want to be shorting this one. I wouldn't buy it because of my outlook on the sector. Plus, it is at this previous reaction high. Like I said, there's only one semi I care to own right now. And that one I'll throw away. It just has to take out the recent lows and it's gone. I'm not married to Intel at all. And MPWR, divergent high, and I'm going to give you a level. You can see my crosshairs. Reaction high, and it's been dancing above this. There's a trend line it needs to break. So support levels 891.80, then the uptrend line, and 780 or 781. And these are potential targets down here. MCHP, kind of a messy chart. But again, one that peaked back here with a divergent high and a bearish engulfing candle. And you can see what it did. It fell, hit this support level, and it's bouncing back. I have price resistance and uptrend line resistance, which is back testing from below. ON on semi, not crazy about this trend line because I only have just barely 3 reactions on it. But if it pops that on, looks, this is one, if you're looking for a long, pops that trend line, especially if the semis hold up as a sector, all day long. I see that target right there, 86.52. So that would be a run of about 10% to get there. So, and then look on the flip side, if you get rejected here, this has been our trading range. You go back down to the bottom, 67.50. STM, this thing looks like death. It peaked back in 2023. It's down 50%. I don't have an opinion. I wouldn't buy it long. I wouldn't short it either. I just don't have an opinion on that one. See, I'm getting down to these smaller names. I don't have them all marked up, but UMC, a lot of volume on this one lately. Look at that. They really come in. I'm going to move that line right there. That's a very important level. Look at the big volume when it dropped down to that level right here. And yeah, this is a really nice support level, about 738. Now it's well above it right now, but it's lights out. I'll set an alert. If it goes under that, that thing's in trouble. TER, Teradyne. Look at this beautiful little back test here. You've got level I've had here. Yeah, okay, I knew there was more than just that. This was big old gap here. You got a big old gap here. There's a little more upside in this gap. It was resistance right there. Divergent high. Boom, drop. Not one of my favorites, but it's at resistance. Skyworks, kind of a sloppy chart. There's a false breakout. There's a little downtrend line. This downtrend line didn't really have that many reactions. It popped through it, and then we went back down. We're on it again. I think I threw this one out as a long back here, possibly. Not sure. ENTG, look at that one. That one just broke down. You've got a nice trend line here. 1, 2, 3, went down through it, back tested, and also nice price resistance. So that one, if it gets rejected here, you've got the 200-day moving averages above, which were just taken out. QVRO, you can see I haven't marked some of these up in a while. They're just sloppy charts. They're just way off the highs. ASX, you can see divergent high, island top. This is called an island top, not a cluster. Cluster is when you have multiple. An island top is a single candle separated by gaps on both sides. It's a reversal pattern. And again, say what you want about it. It's too late. It already worked out. Then that was good for a 37% drop, even if it doesn't go lower. But when you go, when I go to the weekly charts on these, to me, it looks like this is just the start of a bigger drop. So I do think there's more to come. And again, study these stocks individually if you don't believe me. It's a nature. And by the time you wait for Kramer to come out and tell you the semis have turned and it's a cyclical turn in the sector and there's a glut of chips piling up and margins are shrinking, these guys are down. Well, they're already down 40-50%, a lot of them, or at least were recently. But again, the nature, a lot of these individuals, especially these smaller names, 70 is about the number that I usually see when, especially after a very hot, strong uptrend. Because remember, the more powerful the uptrend, guys, the stronger the uptrend, it means they were just flooded with orders. Everything was going crazy for AI and they were buying chips, and then COVID hit and they stopped, production got shut down. And then everybody came online. They couldn't keep up with demand, so they were building factories and plants. And then Biden threw out the CHIPS Act. Let's throw them more money so they can build more plants and more capacity. Well, that's why you can see quite, in the coming years, there could be a vicious glut of chips on the market, and these guys could just take it on the chin. So, all right, I think I'm about done here. Where was I? SOXX. I had a couple more. I might as well just take it home now. I think we already did QRVO. ASX, yeah, I did that one. MKSI. You can just see the charts. You can see my levels. Lattice Semi. Look at this thing's flirting with death. This is just such an important support level. It fell down and hit it. The bounce has been very muted. I don't know what's going on with this company, but if it loses that, especially on a solid weekly closing basis, about $44, no bueno technically. Rambus, RMBS, ACLS. Yeah, I don't know. Strong opinion on that one. Wolf, that's the last in there. And so this is what happens when you get a lights out situation. This thing's just headed. See, so it was like some of those I was just showing you when I say those key support levels, like I was just highlighting in the daily. This, guys, is what happens when you have very well-defined support and you have stocks in a sector when just recently everybody's been foaming in the mouth bullish on chip stocks for the last year or so, and even till recently, and just AI. That's all I hear about. Okay, so what's going on? Then maybe this company has some niche thing. I don't know really what their specialty, what kind of chips they make, but I can tell you technicals. That's what I do know, and I can tell you right there. You can see it. This is not, and by the way, it's not random. I created that line back on June 27th. Must have gone through the sector all the way down to the bottom component, and that was right here was so that was after, it was before June 27th, right before, yep, right here, right before it broke down. So I guess I would have covered this in a video talking about what I'm talking about now. And so, and the takeaway is maybe somebody owned this, and even if you're not profiting, if you were afraid to short it, if you heeded that advice that when 2065 goes, it's lights out for the stock, you would have had a stop right here, and you would have sidestepped another 50% loss, because I can probably assure you anybody in this thing has probably bought it since up here and been holding and hoping and praying, the whole buy and hope thing, and they're down, remember, from the top. I'm sure there are people out there thinking they bought the highs or around it, and 85% drop, thinking, oh, it just can't go down anymore. It's down 85%. It's at long-term support. And maybe Intel does this, and that's why I just told you earlier in the video, I'm not married to Intel. I'll throw that thing away like a hot potato if it takes out the recent lows. And if you don't do it quick, look how fast it happens. This is just this is a weekly chart. But in 1, 2, 3, this is what, 5, 6, not even less than 2 months, 50%, 51% from the break of 2065. So if nothing else, and you can see, look at this stock fighting once it took out the 200-day moving averages, here they're showing us 40-week moving averages on the weekly, and the downtrend line kept rallying back. This is what a bear market looks like, folks. They're extremely profitable to trade. I know we have some cross currents in the broad market right now. You have levels to watch. You have both my near-term outlook, which, like I said, will be decided next week on how we treat those, trend lines and resistance and support levels I gave you. But longer term, the overall, the case I just made, talking for almost an hour, the semis are, like I said, one of my top picks for being short. And once I have more confidence that the market has begun its next leg down, and I've given you levels for that, then I will get pretty aggressively short on this. And then the takeaway too is don't underestimate. A lot of people are short-sighted with this stuff. They go in, they have a couple months of losses or a series of losses, and then they finally take one. They agree, that the stock's breaking down, they should short, or same thing on my long trades, and they get out too early. If you were, let's say you shorted this on 2065 and you were down 10%, if you had the urge, you have to have a plan. Where do you see things going? That's why I do these videos, and I always loop back to my longer term targets and bigger picture, and then kind of near term stuff as well. So this is, keeping your eye on the prize. If we start to get more evidence, we start to take out the next trend lines in the semis and the market too. The semis are not going to go all the way down to those deeper targets without QQQ and SPY rolling over. Let me just say that. All right, I'm going to stop it here, get the video out to you guys, and then this will be the last video I do for the week. I will cover wheat. Still looks good. I still like it. Natural gas is still holding those lows with divergences. I still like that. I'm not crazy. I want to see. I'm not crazy that we faded back to that breakout point, but I still like it. Those are the things that look good, other than index and semi shorts. What else do I have for you? That's about it. We'll pick it up next week. Keep an eye on the financials. I give you some key levels on key stocks there. And, of course, the indexes. And we'll pick this up next week. This has been Randy Finney with Right Side of the Chart. Have a good weekend.